continuing with our day-long transport theme. We're now heading over to Nairobi for a look at developments in the railway sector. We're joined by Tobias Heinemann, who's Chief Commercial Marketing Officer at Rift Valley Railways. Tobias, good afternoon.
Good afternoon.
Okay, obviously a lot of attention has been on RVR recently with the disbursement of 14 billion shillings through syndicated financing for the modernization of Kenya's railways. How advanced are those plans?
Well, basically with the signature of the debt package, which was done on the 2nd of August this year, we are now prepared for moving the railway system here in Kenya into Uganda into a better world. What we are planning to do is to spend at least a capex of $287 million into the system in the next 7 years in order to do 4 things. First, we are planning to refurbish the permanent way, the tracks. Second, we are planning to refurbish and implement better rolling stock, locomotives and wagons. On the third side, we are planning to introduce and implement a new IT program. And last but not least, we have special turnaround programs in mind, which we plan to implement in order to improve the whole system and make the whole system more reliable.
Now, it's quite a big project that you're describing to us, Tobias. How do you ensure that all the shareholders meet their obligations? The countries involved, mainly Uganda and Kenya, also work in tandem, and that you support local industries? Because we know in the past there have been shareholder spats.
That's right. Everybody of the whole management team, the shareholders, the management team, the senior team of RVR, we all know what to do and what we need to implement, because we are basically serving the customers and we are serving everybody here in Kenya and Uganda, because it is our task to show everybody that moving from road to rail has a big advantage, not only for RVR and not only for the customer, but also for the whole society, for the government. Currently, the market share of the rail business is at around 6 to 7%, which is actually very low. And we are planning to increase this market share on a year-to-year basis. We have too many trucks on the road and too many trains running in these days from Mombasa to Embakasi and to Kampala, and we definitely need to change that.
We've focused obviously on the financing through the syndicated partnership of the consortium that governs RVR. But there's also this issue of how rail investments support local manufacturing industries. That's a big concern across Africa. You're importing locomotives, for instance. The technologies come from countries in Europe. How do we ensure that local industries benefit from this?
Well, first and foremost, we are saying we have our investments here. We have our rolling stock, which is actually very old, and we have done one management decision. Instead of buying new locomotives in the first 2 to 3 years, it is better for us and better for everybody that we start to invest and spend more money for getting spare parts for existing locomotives and existing rolling stocks. And all of those, they are coming from other parts of the world. But we definitely will make sure that all companies being located here in Kenya and Uganda will also get that chance to support us on our way to improve the railway system.
You mentioned obviously 2 streams, passenger rail, cargo rail. Some people would say when you look at the impetus for regional integration in East Africa, whether you're looking at COMESA, whether you're looking at the East African community, there's a strong case for improving trade networks and a strong case for cargo rail as opposed to passenger rail. Where's the money for you?
Well, where's the money for us? The money for us is basically on the cargo side. We are earning more than 90% of our revenues on the cargo side, and the passenger business is actually very small business on our side. Therefore, we are concentrating on the cargo, we are concentrating on the logistics, which is coming from the fact that the growth rates here for Kenya and Uganda are at around 4 to 5% on a year-to-year basis for the next 5 to 7 years. And this causes a huge demand for logistic and better infrastructure, and therefore the management decided to concentrate on the cargo side. Another issue is that our concession on the cargo business runs for another 20 years basis, whereas our concession for the passenger side expires by end of June next year. So therefore, we cannot do any investment right now on the passenger side. So actually, we are concentrating on the cargo.
Let's talk about that concession of over 20 years, because people are saying that's really the future. Government must provide transportation, but they obviously can't manage the assets. This is where the private sector comes through. How do these concessioning arrangements work? Okay, whilst you're sorting out the technology there, Tobias, tell us about the concession, how it works, the relationship you have with the government, and whether it works in favor of the private investors.
Well, the whole concession agreement is basically an agreement with Kenya Railways and Uganda Railways. They are our partners. And we are together sitting in one boat, moving to the railway system into a better world. We have restructured the concession in the last 2 years, and we have defined specific targets which needs to be achieved on our side in terms of capacity, in terms of number of trains which we are running in the next 5 to 7 years. So basically, we feel very strong support from the government and from the two railway regulators in Kenya and Uganda. And we all know that only fighting together will move the railway system onto another level.
And profits, I mean, you've only just recorded a profit of something like $600,000 this June after lots of losses for RVR. Where's the value in investing in rail?
Well, the value investing in rail is, I mean, there are a lot of railway companies around the world which are really owning money, especially on the cargo side. If you look to the United States, or actually our partner company in South America, the company called Americana Latina Logistica, they also earn a lot of money. They are public listed. So basically, well, yes, of course, by improving the railway system, since we are a financial-driven organization, we also need to produce a turnaround program, and also we need to earn our money. We are pretty sure in the next years we will earn money, and this company will become a big blue chip here in Kenya.
All right, thanks so much for bearing with us and our very naughty earpiece. It bothers me too in Johannesburg if it makes any sort of concession to you. Tobias Heinemann, who's Commercial Marketing Director of Rift Valley Railway.